Hello, welcome back again. This is the second video I'm making about Alibaba today, but there is a reason. When I made the video, the price of the stock was like 6 to 7% down. And as I said, I was expecting it to drop below 80, maybe reaching 77, 78, to potentially buy even more. Because I already had bought $15,000 worth of shares. I just added 5,000 more, so right now I have 200 shares really. And I wanted to make this video just to explain the absurdity of what I'm seeing here with Alibaba. The numbers have gotten absolutely insane, and I love to see that because this allows me to accumulate more shares. So yeah, currently sitting at about 20k that was my original cost basis. Right now it's actually less because of the market movement. But I don't really care about it because what's been happening here with Alibaba is absolutely insane. A lot of Chinese stocks have been bust for no real reason. Many of those have been bust for a reason because they have delisting potential. But companies like Alibaba, potentially JD or Baidu, I'm very doubtful they even if they ever even had a concern for delisting. The thing is, this kind of fear porn actually helps us with decreasing stock prices and allow us to buy even more shares. And this is what I did. As the known saying says, this was actually supposedly said by a Rothschild. You need to be buying when there is blood in the streets, and even if that's your own blood. That's what the saying says. So that's what I'm doing myself. I love it when the stock prices go lower and lower, even if I hold the stock, as long as the company that's getting backed by that stock is actually a great company and it's making tons of money and its operations are stellar. And I liked this article here, which is a great breakdown of what's been going on right now. And you will see that Alibaba is actually indeed ridiculously cheap right now. And again, I love to see that. It's been down like 17% in a couple of days for basically no reason, just recycled news. And I love to see that because there's nothing has really changed fundamentally with the company. I'm just getting a discount. That's how I see it, and that's how it is really. And as you can see, a lot of Chinese ADRs have been plagued by delisting fears. Now, things like the recent announcement by the US, a potential war of China and Taiwan, things of that sort have actually added to the concerns. And also, as I mentioned, the notice that the US had about Chinese companies not being in full compliance with US accounting laws has also played a part in actually having people flee all the Chinese stocks. And you can understand that for a lot of stocks, but companies like Alibaba, they are not the same as any random company, any random Chinese company. Not even close to that. So, as you will see here, Alibaba currently trades at 10 times earnings here, 1 point times sales, 9 times operating cash flow. These are very low valuations, of course. Very interesting table here showing the adjusted PE for some of the well-known Chinese companies. And then Alibaba is actually the lowest, 10.1 over here, as you can see. Similar with the price to sales, very low. Only JD is actually better than that. So look at these numbers. They are pretty much pointing that all of these companies here are very cheap. These are very well-known companies, and especially Alibaba seems to be the better value of all of these. And probably the biggest company, really, practically speaking. And the growth of the company has also been stellar. And I have actually noticed that in my calculations and valuations when using my valuation tool. The growth of Alibaba has been stellar, really. And, all of the metrics look amazing, yet the company keeps on falling. And so I had to buy more. And I wanted to make a video to let you know about it because I think this is a very interesting topic. Alibaba is very hot right now, keeps going down and down, yet it doesn't faze me at all. And this is why I kept on buying. And, I think it's potentially interesting to keep an eye on it and maybe add even more later on. I'll see. But the article actually mentions some things here that can be potential one-time costs for Alibaba, which do not really concern me. All of this, most companies actually have some sort of fines at some point that they have to pay. There's an antitrust fine here. There was some extra taxes from China that we talked about in previous videos. But the financials of the company again have been stellar, and nothing has really changed. Practically speaking, just the potential of a reduction in revenue doesn't really faze me, and that was only for one quarter. Doesn't really faze me at all, because this happens with every company. It's just the whole story here about the potential delisting that has actually helped us potentially get better value here, and I love that. And the other thing that I wanted to just quickly show you here, I mean, I'm still working on some things here in terms of the stock analysis tool, but I was using the stock evaluation tool with to check actually what double check really what kind of value I'm getting here, because it's the company's stock price has been going down so much that we're currently sitting at $78, and you can actually see an insane potential gain here. And the thing that actually you need to pay attention here is the fact that the revenue growth is sitting at about 40% plus for the last 5 years, which is absolutely insane. Like, look at that, 48% was the 5-year average. So if I'm going with projections of let's say 18, 19, and 20, let's just be conservative. I think this is very conservative potentially for Alibaba based on what they have been doing. But okay, we have heard about some some revenue reduction, I suppose, or stalling in terms of growth. So okay, let's go a little bit conservative. The net income margin typically will probably stay similar. So I'm gonna go 20, 22, and 24, which makes sense. The free cash flow the free cash flow margin is also very high, but they did have a year where it was 90%. So I'm gonna go with that. I'm gonna go 90, 95, and 100 here. And an annual return of 13 is the casual one that I like to use. And using these projections, which are fairly conservative here, I'm getting the lowest price of $200 here, 205. So the highest one is pretty much $300 here, based again on what the company has been doing. So I couldn't avoid buying more. I'm just seeing it completely objectively based on what I'm seeing here. It's all numbers. I don't care. I don't care at all about what's happening with the stock price. This is irrelevant to me. I don't pay attention. Unless something changes with the company, fundamentally, I won't be paying attention at what's happening in the markets in terms of stock news and some political tensions and things of that sort. That doesn't concern me at all. Unless there is something, again, I guess, unless there is something that's fundamentally changing the company, something that's like some sort of fraud, some sort of very important political intervention. This can change my thesis, but right now the company is absolutely insane value for me. So if I go with revenue growth that I think is a little bit more normal, that's potentially going to happen, I would go for something like 23, 25, and 28 maybe, which is still way below that. But I think it's a good estimate to have for the next 5 years. And I think this is more close to what's going to happen. This is closer, I think. And so then I calculate again, and now I'm getting 248 as my lowest estimate here of 20 with a 23% revenue growth for the next 5 years, and the highest one at $400. So this is basically, this is absolutely a buy for me, and it's a no-brainer, practically speaking. And this is why I kept on buying, and this is why I bought more, and I can't stop. So I guess I'll have to stop at some point, because there's always some risk with with stocks and companies. But the thing is, this risk gets mitigated by the cash, by the money that the company is making, or largely mitigated by that. I mean, it's gonna be tough for a company that's making so many billions, and a company that is actually trading at like 8 to 10 times free cash flow. It's a massive tech company that's actually an e-commerce company that is actually growing massively every year, and it has the multiple of car maker. I mean, that's absolutely insane. So yeah, I'm definitely buying here, and I just did. So I wanted to make this video just to let you know, because I thought it would be interesting. And thank you for watching this one again. And you may want to watch my previous video on Alibaba as well, because I was discussing about it earlier today. yeah, I think it's interesting to take a look at. And if you're not a subscriber, consider subscribing. At some point, I will actually give away this tool to people. And also, please like the video because that really helps grow the channel and get more people here so that I can make more videos for you guys. Thanks for watching this one. Bye bye.